what we call wholesale schemes, where we're putting money directly into funders to capitalise them, to provide them guarantees on their existing loan books, so that they can provide more funding for SMEs.
Quick question
And
there, Lewis. Quick
yeah, of
question.
course.
On the regional funds one, you mentioned like UK government and EU. Is that sort of diminishing now, the EU content? Because obviously post Brexit, a lot of schemes like ERDF are reducing, aren't they, or coming to the end of their natural cycle?
Yeah. Absolutely, Sam. You've slightly stolen my thunder as quite a few speakers. I thought at some stage Hugo was going to do my presentation for me. He would have been more than welcome to, but you're dead right. So the only scheme that we actually have that is European funding necessary is actually the two regional funds that we deliver. But I'm going to explain to you, they're coming to the end, by the way, but I'm going to explain to you a little bit about what we're doing in that respect going forwards. We are a government body. Most of our funding comes directly off government's balance sheet. So actually, that's the only real scheme where we've previously bitten the bullet, taken European funding, and like a lot of organisations at the moment are seeing the end of it. But we're not reliant on European funding, rightly or wrongly, Sam. Never have been. And I'll explain a little bit how we're addressing that in terms of those regional funds as well.
Cool.
I think you asked me a little bit to focus on the equity side, on the assumption that the audience may be probably more appropriate for equity funding or risk capital, as we often call it. So again, that first box, which is not shaded out, is pretty much that family, fools and friends grant funding that Roger again earlier talked about. We often call it the valley of death, and it's that really, how do I start with no security, no track record? Who's going to fund me? And typically you're going to be funded through your own money, personal credit cards, although I'm definitely not recommending that. Family, friends, fools, bit of grant funding, etc. We don't do that thing. We do that first bit of funding, which is more commercial, whether it be debt or equity side. So we do a bit of seed funding. We are increasingly getting involved in that angel marketplace that some of the earlier speakers told, and I'll talk a little bit about how we do that. But our principle being in terms of the equity side is to support scale-up businesses. So on the debt side, it's about giving more debt funding options to SMEs. On the equity side, I think our real sweet spot in terms of where we've done well previously is providing that first institutional round, which is all around scaling your business at whatever stage you're at. But I'm going to focus a little bit more on the next slide on those particular equity pieces as well. So in terms of our main equity programs, as I said to you earlier, we have started to venture into regional angels, as Roger, I think, particularly mentioned. Angels, high net worth, sophisticated investors, whatever we call them, will typically do that very early stage. They'll do it for a whole host of reasons. The tax relief that you did a great presentation on earlier, Sam, because they're interested, because they can only play so much golf in a week, all those sort of issues. What we do in terms of angel investment is we run something called the Regional Angels Programme. And all we simply do there is we put chunks of £5 to £15 million into what we call investment vehicles. They're not those informal angel networks that you may often come across. They're actually formal investment vehicles run by regulated bodies that they get together a group of investors under EIS. They pull that money together and they invest it as an angel, albeit with various pots of money. And all we're simply doing there is co-investing alongside them for two reasons: to give them more money to invest in UK businesses, but actually, as the name suggests, to actually get them to invest more outside of the London southeast regions. Okay, so we incentivize them using our money to invest outside of that golden triangle.
And do you ride on the tails of their due diligence then?
Yeah,
so
absolutely.
If they say we're good to go with this, there's no further. Yeah,
absolutely. In terms of what we do on the equity side, with all of those three schemes that you see on the slide in front of you, government, or through us, government is effectively what we call a limited partner investor in those investment vehicles. All we're doing is giving those fund managers money as an investor. And we're doing it for various reasons. With Regional Angel Programme, it's about getting more early stage angel investment into the market, but it's also about incentivizing more angel investment deals outside London South East. I'm going to give you a killer stat, Sam, because it's 4:15. Okay, go for it. Did you know that 75% of all early stage equity funding is deployed in London and the South East?
Whoa,
Isn't that
that's
shocking?
that is shocking when you've got, yeah, Birmingham, Manchester, the East Midlands.
So one of our roles as an economic development bank is to address that. So
Yeah.
we will do that in a number of ways. And I'm going to talk about the regional funds in a bit as well. In terms of some of the other things that we do, one of the longest standing programs of public sector funding is called the Enterprise Capital Fund. You would have never heard of it. Why should you? And really what Enterprise Capital Funds program is all about is actually to get more fund managers investing in early stage businesses. So what we simply do there, go to fund managers and say, we want you to invest more early stage money. You won't do it using your investors' money because it's too high risk. Use government money to actually invest in that first Series A or even seed round of less than £2 million. And that's solving that equity gap problem that a lot of people have sort of skirted around, investing in early stage businesses with limited track record and doing that risk capital. One of the big issues for UK PLC, Sam, is patient capital, is being able to put larger sums of money. Hugo's story and journey was absolutely fantastic. But what you'll often find is businesses, even if they do that equity route, actually will have to raise lots of rounds of funding to scale up. And the problem is in the UK is that we don't have the size and pots of money that perhaps you would in the US. So we've got two commercial subsidiaries. One of those is British Patient Capital. And as the name suggests, BPC, British Patient Capital, is all about being able to write bigger check sizes in follow-on rounds to businesses that are going to really, really benefit UK PLC.
And are they still, after that same quick turnaround, in and out in 3-5 years?
Yeah, so I heard about that a little bit, and the reality is that a lot of our funds on the equity side are 10-year funds. They're 10-year funds, Sam, and they're normally done on the basis that the first 5 years are an investment period and the second 5 years are realization periods. Now, that looks really neat and tidy, doesn't it? Because every business exits within 5 years, make lots of money in returns. The reality, particularly in the early stage market, is that doesn't happen.
Yeah.
So even though they're not all called patient funds, they all have to be patient funds because where we operate in. But the intention for us is not to make lots and lots of money, although we do give money back to government, is to actually just provide that first step up in terms of that journey, that funding journey. We don't want to run businesses. I know there's a massive issue around losing control of businesses. And similarly, we just don't have the firepower to put 20, 30, 40 million pounds into individual businesses. That is not our role in the great scheme of things. UK market's a bit better in that respect than the early stage bit. I mentioned the early stage bit, startup loans, another scheme that's been running for 10 years or so. A great little scheme, and actually really relevant probably to most people here, particularly if you're starting up a business. It does catch the hairdressers, the beauticians, the barbers, whatever you want to call them, the lifestyle businesses. But actually, over the last 10 years, it's supported a lot of innovative potential scale-up businesses with relatively small amounts of money to finish that last beta test, to get that patent sorted, to serve that first bit of revenue generation. And as you'll see from the numbers, 100,000 businesses, roughly around a loan for about £9,000. So we're getting close to that £1 billion, mass market solution to a gap in the market. High Street hasn't lent to startup businesses for a long time.
And does that cover the whole of the UK, or is that just England, or I mean the British?
Yeah, no. So we're a UK bank, Sam. So with the exception of some of the regional funds, we can actually lend and invest through our delivery partners across the UK. Even that Regional Angels programme, the delivery partners can still invest in London and the South East. We just try to discourage them and limit them in terms of what they can do. Startup loans, again, I talked about those disparities, whether they be regional, gender, ethnicity. Startup loans is a great example of ways in which we are leading the way in terms of funding both female entrepreneurs, but also entrepreneurs from an ethnic minority context as well. So we're really trying to address that untapped resource because, again, there are particular barriers in that respect as well. Regional funds, we've talked about it, haven't we? Okay, this is the one thing that we currently do with European funding, and we do currently outside of being an all UK bank. And the reason we do that is because of that 75% stats, Sam. That's why we do it. There are some reasons why that 75% stat exists. There are some reasons which are quite bizarre, even in the technological world that we live in. But unfortunately, it's the way that the UK capital markets are set up. And therefore, to address that, what we've done for the last 5 to 6 years is we've had a number of regional funds that have specifically identified geographies and said, look, we need to put an amount of money doing early stage debt and early stage equity to really encourage those businesses to get properly funded right from the outset. Now, on the back of those funds, which have been pretty substantial, on the back of the success of those funds, in the spending review almost 18 months ago, we got a whole set of new nations and regional funds. Whoa. Funded by government, not by European funding. And each one of these 6 new funds will be launched this year. So as you can probably appreciate, a big focus for my organisation. And you'll see that we have a bigger Midlands fund, we have a bigger Northern fund, but as importantly, we've got first time regional funds in the 3 devolved nations, as well as the southwest of England. So I'm very conscious that as much as I'd love the audience to be East and South East Midlands today, you will quite rightly have a reach beyond that in the UK. So we've got a bit for most people in the UK. Those funds will be launched offering small business loans, debt funds and early stage equity investments in those particular geographies this year. This year.
Whoa. So is that sort of a 1st of April launch, so or a bit later?
So what will happen, it'll be a bit later. And if you're very boring like me and regularly look at our website and on our newsletters, you will see that those bottom 4 funds, because they're new, brand spanking new, are at various levels of procuring fund managers. I would think at least 1, if not 2 of those fund managers will be announced very, very shortly. Because there are existing Midlands and Northern funds, and we can still continue to lend and invest till the end of this year, those are obviously going to take a slight back seat, but there is work currently underdone. We've set ourselves a target, Sam. We're quite happy for government to knock us down if we don't achieve it, but we are putting considerable resource into making sure all of those 6 funds are up and running this calendar year. UK network team, who is this joker in front of us? Well, I work for the UK network team. I am the eyes and ears of the bank in the East and South East Midlands, and one of my roles is to support the regional fund in my patch, but is also to get intelligence from the likes of Roger, yourself, Sam, in terms of what's happening in the finance markets, so that I can go back to my superiors. They can go back to government and say, what do we need to do in the marketplace going forwards? What new products do we need to bring forward? So I have the pleasure of working in my region. I have equivalents in each English region and the 3 devolved nations. And we're always happy to speak to SMEs and also intermediaries that want to tell us exactly what's going on in the marketplace at that particular time. One of our KPIs is to build a centre of expertise. Why do I mention that? Is because it's a KPI for the bank, but actually if you're a business and you want to know what's going on in the market, we do on a regular basis produce very comprehensive independent pieces of research. Okay, I picked out 2. The first one, for obvious reasons, we did a piece of research with Innovate UK, and we did that to show how innovation businesses in the UK were being funded, and how by working together, whether it be through Smart Awards, R&D tax relief, some of the funds that we operate in, your level of success is so much higher if you're properly funded as a business, no matter what that funding is, and if you take a blend and a mix of funding from various organisations. So lots of bullet points there, but worth looking at.
And that's is that available through your website then?
Yeah,
through
absolutely.
the British Business Bank website, because that looks like a good read, actually, as in to actually get a feel for what the market's doing.
Yeah, you're showing your lifestyle there, Sam, by saying.
Should I take it on holiday with me? Download it, print it off, take it with me on the Ryanair flight to Tenerife.
Yeah, if you really want to, Sam. Not even I would do that. We also produce more generic reports because we work with over 200 delivery partners, government, and also fund managers and SMEs. We've probably got the best understanding and independent, non-biased understanding of where the marketplace is. So this is a great report, launched about 2 or 3 weeks ago, and it will tell you what the state of the lending market is, where equity is going at the moment, relatively up to date. Coming back to the why was the bank set up? over-reliance on high street lender. What that report shows that over the last year, more than 55% of all lending now in the UK is done by alternative funders. The likes of Rocking Horse, the likes of some of those platform lenders, we are no longer reliant on high street, rightly or wrongly. Okay. And I'm conscious I've thrown a lot of information at the audience, Sam, as have the other speakers. And again, as a centre of expertise, we have a finance hub. And that finance hub just gives you some high level understanding of the various finance options that are available to you as an SME. So if I leave you with anything today, can I leave you with that website? Have a look at it. It's completely independent. We don't sell anything, and we give you further information in terms of what your finance options are, what they look for, and how you approach those lenders. Sam, that's me done.
Yeah, absolutely awesome, Lewis. And I think actually seeing the regional funds actually spreading out to the whole of the UK, that's so important because we do need to move that equity focal point from the golden triangle, they call it, isn't it?
It is.
Cambridge, Oxford, London, and moving it up into some of the other super clever areas. I mean,
there's some great businesses out there, isn't there, Sam? There's some great businesses out there.
Yeah, and I would say for our innovative businesses, I would say 75% are outside of London of the companies we deal with on an innovation perspective, but they all go to London for the money.
And that won't change short term. And again, I'll give you a stat, and I'm very apologetic. It's parochial, it's East and South East Midlands. 80% of all equity deals effectively come from London at the moment.
Yeah.
I think it's 12% from Birmingham. We have the smallest amount that comes from indigenous investors. Okay.
Yeah.
That's not great. It's good for our regional fund managers. As you know, Sam, being on the patch, they pick and choose because they can. And we talked about co-investment and getting more investment. Fund managers would love to co-invest with angels. There's no issue about them doing it. And it's about spreading risk for them as much as anything else.
Yeah. No. Fascinating. And through that Finance Hub link on the website then, Lewis, we can access into, I'm in the southeast, I'm in Cornwall, who can I go to? And again, it's all linked in there with be it the equity piece that might be happening in Cornwall before it goes to the full southwest piece. And
so I was reminded only yesterday on a post that the bank did that we've actually got we've got a series of regional pages. So there are actual regional pages on our website where you can find out a whole host of information, including specific centres and hubs that may be particularly useful to get in contact with as well.
Yeah. Well, absolutely fabulous, Lewis. Thank you very much for that. I think that understanding that, I think you said 55% is now from alternative non-high street banks. And that's got to be good news. So we're not being shackled with the same slow, tedious, bureaucratic method. They either need to get quicker or they need to, I don't know. I think it's great that there's options.
Yeah, and as Rocking Horse showed us as well, so Rob and James, there's been some great innovation in finance. Now, obviously, the news 2 weekends ago, there's still issues in the finance markets often. But again, we're seeing tremendous innovation to reflect how businesses have changed over the last 10, 15 years in terms of their expectations, asset base, direction going forwards. So finance, like anything else, needs to reflect the way that business life has changed as well. Yeah.
Okay. Thank you, Lewis. I'm kind of thinking with the time where we are, with kind of just on 16:30, which is our finish time. We were going to do a panel session. I think if the other speakers could turn their microphones and cameras on, I'll just see if any questions sort of ping up on the chat. And we'll see where we go with that. In fact, I'll just share I won't share my screen until we get going. I think this has been an absolute, as I said to the audience, this is not about necessarily giving all the answers. It's making them aware that there are other questions to ask. And hopefully this has been an information download about now you can ask the question where now you've got a load of questions you can ask, and you've actually got some direction where to go to get the answers. With Roger's piece about how to protect yourself, how you get the money, Jenna's piece about looking after the numbers so you're on top of the game and understand what's happening. The fascinating journey that Hugo had, I thought that was absolutely terrific. And the new young pretenders on the scene there with Rocking Horse and novel ways of funding innovation, and going through that kind of small valley of death. Every time you do some innovation, you run out of cash. Let's actually keep the whole train moving. So I think that's great. And then some of the news you were saying there, Lewis, with the regional funds, I thought was absolutely brilliant. So I don't think we've got any more questions. I think people are looking to go and have a cup of tea now. So I'm just going to, you can turn your, oh, here we go. So 3 more fantastic workshops coming up. So we've got people and recruitment, we've got product design and protection, and commercialization, all of a similar format. We've got some fantastic speakers. It's all about making you aware of stuff that you may not know and where to go and get the help, and just make you think about the bigger picture. The innovation challenge is now open. I think Joe will be sending out an email that will go around to everybody. Please share that with any other companies you think would be interested. And yeah, speakers, thank you so much for coming on board. Shakespeare's, thank you for sponsoring the challenge. Modus for today's workshop. Really do appreciate all the support, and thank you everybody for spending some hours of your precious time with us today. Really hope you got something positive and useful out of it, and look forward to seeing you in a month's time at the next workshop. Thank you very much, everybody.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.